What's up, guys? Welcome back to another episode of the Block Hash podcast. Today, we have another wonderful guest, Hendrik, CEO of Thalex, where they are revolutionizing the trading experience. We're going to learn more about what Thalex is all about. We're going to talk about futures, options, perpetuals, and anything that might be important here in the trading markets today. Hendrik, welcome to the show, man. It's a pleasure to have you on and to discuss what you guys are doing with Thalex. What's up?
Thank you, and it's great. It's great of you to have me on.
Likewise. It's pretty crazy today. As of this recording, Bitcoin's pushing 95,000. We're getting closer to 100,000. It's got to be pretty exciting for you guys to watch on your end as well, right?
Yeah, and what's particularly exciting is that yesterday we had also the first launch of the options on the ETFs, the IBIT options, and so that's also something that we've been seeing in crypto, of course, for a longer time. Like people are using options to express views on whether we'll beat 100K with Bitcoin by the end of the year. So far, it's looking good. Like the probability implied by the options market is getting close to 50%. Yeah, I think the all-time highs are sort of a great point to get into options.
Absolutely. We're going to dive into some of that stuff a bit more here as we get into the episode. But to kick things off, I'm sure people would love to know a bit more about you, Hendrik. What is your story essentially? How did you get into the Web3 space, and what kind of led up to you being at Thalex?
Yeah, so I got into crypto in probably a relatively bizarre way. I was in my past life, I was always in investment, first banking, and then in private equity. And I was working for a fund that was backed by an entrepreneur who got interested in crypto in 2016. And we started buying coins, and then in 2017 we started looking at crypto companies, and we became the first sort of majority buyer of crypto exchanges in 2018. The most notable deal there was Bitstamp. And after we acquired that exchange, I decided to focus full time for the fund on crypto, and did that for a few years before meeting the co-founders of Thalex in 2021. Um, and through this acquisition of Bitstamp, and buying coins earlier, I've sort of seen that evolution of spot trading to derivatives trading. Really in 2017, right? Like the spot pairs were really where people would take a view on Bitcoin prices, and then in 2018 you saw the accelerated trend towards derivatives. And so the key idea that I got at Bitstamp was, well, you need to actually partner with derivatives if you're in spot, because people increasingly just use you in spot for the on-ramp transaction, and then they move their coins to Binance or Deribit or anywhere else. And so when I joined Thalex, the other co-founders were all former market makers. They had the options trading experience to come up with the idea of how to build a new options platform. Essentially, the idea was dairy better. Like, how do we build a better Deribit? Deribit being, of course, the leading options exchange and the first crypto options exchange. And then my contribution to the team was to figure out how do we create a strategy. And the insight there was to take that idea that I had Bitstamp and start actually solving the other side of the equation. And so from the ground up, we decided for Thalex we would not just build an options exchange, but also make it open as a service for other exchanges to plug into, and make it so that we can get access to the existing customer bases of different exchanges, and make it easy for them to try out their first trade on Thalex.
What would you say is the core mission of Thalex? Like, what separates you guys from other trading platforms out there and makes you guys more unique?
I would say is that we're built up from the ground to facilitate options trading. Like all other like trading venues, including Deribit, they're like the options trading really sort of grew out of the perpetuals trading. And so we've engineered the perpetuals and futures trading to be as synergetic with options as possible. So the interesting thing with options is, of course, that they are an instrument that relies on other instruments to work well. Right, the market maker who sells an option, they want to have access to delta hedging liquidity. Ideally, they can hedge an option with a future. But in crypto, the futures are nowhere near as liquid as the perpetuals. The perpetuals are a very good hedging instrument because they're liquid and there's a lot of volume in them. But the problem is that the funding rates are very annoying if you're a market maker, right? If you in a market like this, right, you're selling a lot of calls, then you have to buy the perpetual, and your funding rate keeps on increasing. Ideally, option market makers can hedge with futures uh, if they were more liquid. And so what Thalex did is actually solve that by creating also combination orders between perpetuals and futures. We call them future rolls, and they are basically order books where you can trade perpetuals against futures. Really, what it is about like arbitraging the premia implied by futures and the funding rates that are charged on the perpetuals. And when people trade those, that actually drives liquidity into the futures and ultimately makes the options more liquid. Um, so that's sort of the engineering perspective of how we are somewhat different. And then the other thing is that distribution strategy, right? Like when you think about options, it's the consensus is that it's going to be a much larger market also in crypto in the next 3 to 4 years. But if you look at the customer base today, it's sort of pro tail. It is mainly institutional. It's a very small portion of the traders that are currently active in it, and it's also still a relatively large, a small chunk of the volume. Right, it's on a daily basis, it's 3 to 5% of the total volume is in options. So that's a very big gap with where options are in TradFi, where they're mainly the largest derivatives segment. Um, and so what we then do differently is to say, okay, we're not gonna get access to that customer base initially by doing marketing. That's actually also increasingly difficult if you're regulated. We want to partner with the exchanges where the customers are already there, and then make it very easy for their customers to onboard with Alex. And so, if we are successful, we'll not just have built a better options market, but we'll also have created this new distribution model where exchanges partner with each other and they don't build everything themselves, and they can specialize more on particular products and connect together so that they can offer a more integrated and more comprehensive customer journey to the customers they already have. And then in more detail, what this integration strategy involves is simple things. It's just realizing that, well, most exchanges, right, they do KYC. What if you simplify the onboarding flow by allowing that KYC information to be shared, so you don't have to like put all that information again into a form and do a selfie, right? So that's something that that's the first thing we do, is to remove the friction in onboarding. Then what we do is say, okay, we make the transfers of assets between the exchanges, we make that free and we make that fast. And then thirdly, we integrate the UI so that you don't need like separate credentials for Thalex. Like once you're at the partner exchange, you can just use your credentials there, and at some point in the UI, trade on the button where it says Thalex, and our UI just opens up right there. Um, and so this idea is now no longer just it's no longer a vision or like just an idea. It's actually something we've now built. A week ago, we actually went live with our first exchange partner, which is Bitfinex. Um, and so already today, if you're a Bitfinex customer, you can sort of benefit from that easier onboarding and trading journey. Yeah, right from the Bitfinex UI.
It's very interesting. In terms of exchanges you want to integrate with, are you thinking more along the lines of the Bitfinexes of the world, Binance's, Coinbase's, stuff like that? Or do you also want to approach traditional exchanges that are starting to get into, Web3 assets as well? And then, is there potential for even DeFi exchanges to maybe integrate Thalex?
So the first target really is the OG spot exchanges, right? And Bitfinex, I would say, is the best example of that. So we're very happy that we could get them onboarded first. I mean, they have just this really large base of early Bitcoin traders. They're still actually the third largest exchange in terms of Bitcoin and ETH under custody. And one of the great use cases for those Bitcoin OG traders is to generate yield on their Bitcoin, right? So if you think about it, in a world where you only have perpetuals or futures, right? The only way to generate yield on a Bitcoin is to sell perps against it, but then you're delta flat, right? And you have the opportunity cost of not benefiting from that upside. With options, right, you can sell strikes that are uh, well above the current prices of Bitcoin. So that's the interesting thing you saw, for instance, in the earliest data that's coming out of the IBIT options, right, the ETF options. 80% or so was traded in the less than 20 delta options, right? So actually a less than 20 delta call. So that's a lot of people um, buying calls for upside. But if you already own Bitcoin, you can sell upside calls and you can generate yield on your Bitcoin. And so that's a real great use case, and there's a lot of interest from OGs in that. The hard part is then, of course, like which exchange do you trust? You're usually talking about like a lot of Bitcoin under custody, or that's self custodied. And the nice thing is with Bitfinex is this very secure exchange, and so we're happy to partner with them because that's where already the bitcoins are, and then their customers can use us to generate yield on that. So another exchange that invested in us was Bitstamp. So that's also somebody we've been discussing a partnership with. So in the first order of business is going towards other sort of spot or Delta One focused exchanges. Over time, we can indeed partner with any derivatives exchange as well. And then with DeFi, I think the integrations are less straightforward. DeFi options is also a very small market today, much smaller still than the centralized part. But it definitely will be interesting to facilitate CeFi DeFi sort of arbitrage. Right, in DeFi, the reality is that you always need a reference price, right? Market makers need to know what the value is of a Bitcoin, and then you need to know what the value is of the equilibrium value of funding rates in perps, future premia, and ultimately volatility for options. And so they go looking for those prices in the centralized venues. And ideally, like a market maker could for instance make markets on a DeFi option platform, and then be able to actually hedge exposure on a more efficient centralized market like Thalex. And so once we have like the first implementation of our strategy up and running, we definitely look towards DeFi integrations longer term as well.
Yeah, it seems like Thalex is something that's very widely expandable to different providers at some point. In terms of like getting set up, like whether it's through another provider or through Thalex directly, do you guys have your own verification process and KYC that people have to go through, or do you defer to a provider that you're working with, or how does that kind of work in terms of someone getting set up if they wanted to jump into this right away?
Yeah, so we have direct onboarding funnels, so people can just sign up on Thalex.com. But yeah, if you're for instance a Bitfinex customer, then it's easier to use the integration, and then it's really all about like consenting that your data be shared, and then it should take less than 30 seconds to submit your verification request.
Got it. And I think most retail traders are probably familiar mostly with options, futures, perpetual stuff like that, especially within the Web3 market. But for some, it can get a bit confusing how some of these things kind of interact with the general market. Do you guys have like educational resources you guys put out there or anything to help kind of guide retail in terms of teaching them how to go about these markets?
Yeah, so we're actually kicking off an educational series together with Bitfinex on options and futures. Um, but really, the core way to think about it is that options and futures, right? When you use them to express a directional view, um, they sort of are the same trade. It's just a different. Um, there's just like nuanced differences in how you use different tools to express it and what factors you're sensitive to. Um, so actually, options historically grew out of futures, right? Futures really are all about solving the problem of how can I trade a commodity without it being in my warehouse, and how can I trade over time. And then futures are a mutual obligation of the buyer and the seller to agree on a future delivery and a pre-agreed price. And naturally, what happened is because people are more asymmetrically sensitive to prices than they are symmetrically sensitive. Um, if you're a buyer of a commodity, like your main concern is that, or your main reason to lock the price is because you don't want it to go up. If it goes down, like you actually might have been better off not hedging with the future and just buying in spot. And so naturally, like in already in the Middle Ages, right, their options grew out of futures by people saying, hey, if I pay you a premium on top of the future, can I then get the right to not have to take delivery? And that's how the option becomes an asymmetrical tool. It has its downside capped. And ultimately, that became popular enough to become its own standalone product, right? And then it was no longer the future and the premium, but just the premiums alone that became tradable. And so fast forward to today, if you look at a future with a stop loss, and you look at a call option, the payoff graph looks the same. The key difference, though, is that everybody knows this. Everybody who's traded the perp has experienced this. Yeah, you can be right on direction, but if volatility picks up, you have a higher risk of your stop getting hit. And once your stop gets hit, it's not just a stop loss; it's also a stop gain. You're out of the trade. You need to re-enter. Um, with a call option, um, you can think of it being a stop loss in a premium format. It's sort of a rechargeable stop loss for a certain amount of time, right? It doesn't just stop you out if the price goes against you, but it buys you back in on the way up. Um, and so it's the same trade. It's just like you pay a little premium for that privilege of a premium stop loss order, a premium downside protection. And how valuable is that premium is really then a function of volatility, right? The more volatility, the more uncertainty there is, the more likely you're going to cross that sort of stop level multiple times, and therefore the more valuable the call becomes relative to the future. And that's how, like, very intuitively you can sort of figure out, like, hey, it's maybe the same directional trade, but in function of volatility, right, the call might be the better tool for the job than the future. And so that's the key thing that we need to get across to people is that perpetuals, right? They're very easy to get into. They're very like intuitive. It's also easy that you don't have to pick a maturity, you don't have to pick a strike. But whilst it's easier to enter the trade, it's actually much harder to manage the trade, right? Because you're sort of short volatility. If volatility picks up, there's a lot of ways in which you could get stopped out of the trade. The price then ultimately recovers, and you wish you wouldn't have used the perp. And that's where you should have used the option instead.
Absolutely. And that's where a good education always comes into. So a lot of traders that get in, may have been in spot markets for a very long time, and then they touch, futures, options, perpetuals for the first time, and they probably aren't as familiar with some of those nuances. So it's good to have any kind of educational material out there for people, especially in the retail sector. Is Bitcoin the primary asset with Thalex, or do you guys also have plans to expand to other digital assets and include the same types of functionalities?
Yeah, so we started with just Bitcoin and ETH, and that's because it's by far where the action is in options. Right, in options you have that fragmentation of liquidity across strikes and maturities. And you also, very importantly, to have sort of somewhat affordable options markets and somewhat efficient options markets, you need the market makers on your side. And if volatility is extreme, then options become quite. Um, and for all these reasons, right, in terms of market maturity, fragmentation, market maker adoptions, pricing logic, Bitcoin and ETH are by far the largest markets in crypto right now. And those are the markets that we decided to focus on initially and really focus there on making sure our platform is scalable, making sure our distribution strategy is working. Um, and that's really where we want to prove our platform. That said, I think altcoins is a great use case for options. Um, right? If you think about it, like a call option, right, can be used to sort of hedge against upside on a coin that maybe you don't want to own unless it's really going up. Or conversely, right? Like it's a way where maybe you can use put options to your advantage to accumulate more of a coin over time. Because in markets like these, usually when there's been a sharp rally, right, the corrections to the downside can be quite sharp, and that's where put options can give you like really nice convex payouts. They can help you manage volatility, but then also reinvest the profits into accumulating more of a coin. Um, and so it's actually great for altcoins from a demand perspective. The hard part for altcoins is a supply perspective. It's how do you get market makers to show reasonable prices, um, and that's something we where we let Deribit be a bit of the trailblazer on altcoins. But where as of let's say early next year, we do want to start adding altcoins. And then we'll start adding not just altcoin options, but also altcoin perpetuals and altcoin futures.
Nice. Are any altcoins in particular, can you say, or is that under wraps for now?
Yeah, that's too early to say. But yeah, it's gonna be fairly close to Deribit. Because if you're a market maker, like this is very important actually to understand. I think in general about derivatives markets is that um, nobody actually on the market making side has a view on price, right? They just take a fair price from somewhere else, right? They take the fair price of the spot index. They take the fair price of funding rates on different venues, and then they decide on a certain exchange how to quote in function of the market equilibria elsewhere. And so really, what people are constantly doing is they're replicating the price from somewhere else. And so if you have an option market on Deribit, and you want to replicate that on Thalex, it's sort of fairly easy to do. You basically look up the price in Deribit and you quote around it on Thalex. If we start adding new altcoin options, that could be interesting, but then the question is how to price them. And so there's a lot of other platforms, for instance, DeFi, who have been experimenting with early adoptions of altcoin options. But if you're a small venue and market makers don't know how to price something, then they basically just put like these crazy numbers, and ultimately no trade happens. Um, so I think we'll be more pragmatic. We'll probably do sort of Deribit plus maybe a couple of altcoins where we see in function of our discussions with market makers that they can quote reasonable prices. But also like there, if I may add a comment, um, you know, a big part of why Bitcoin and ETH options volume is picking up is just because the vols are more affordable, right? The vols are coming down. 3 years ago, 2021, for instance, Bitcoin volatility was priced at like 80 to 100%, roughly 1 month out. And so that kind of means that like hedging like Bitcoin exposure for a month could take like between 7 to 10% of notional. That's just quite expensive. Um, Now, actually, in the years that followed, vol has been on a secular downtrend. So right now, like with Bitcoin very close to all-time highs, we're trading at like 60 vol, right? And the mean reversion is around 50. Big part of the altcoin options right now, like they can easily still be at that 100 to 150% vol, and that just means they're really expensive. And so I think look, altcoin options are going to be a big segment of the market, but it's sort of going to be slow at first until people really get comfortable pricing them. And then they'll see like probably a similar track as Bitcoin, where you just see that the vols are coming down, and that's where these markets will start taking off.
Very interesting. Are you seeing any patterns or correlations in the market now that the market seems to be moving in the upward direction once again? I mean, Bitcoin the last 3 weeks has gone like on a $30,000 run, more or less, because I think it's about 95,000 right now. If we average it about at 65, which is a pretty big move for Bitcoin in a short period of time, and altcoins seem to be following pace as well. I think factoring in a lot of stuff happening in 2025. But is any of that reflected from what you can see in some of these other markets like futures, options, maybe even perpetuals, even on Thalex, outside Thalex? Just kind of curious.
Yeah, it's if you compare it to the 2021 all-time highs, it's a very different it's a very different dynamic when you look at what are the prices that the derivative markets are feeding you back, right? Because really, it's a job of the spot market to sort of pricing all the expected future paths that Bitcoin can take, right? That's in the spot value. But then what does the perpetual market, the perpetual price relative to the spot price tell you? Well, if that basis, right, if that price difference becomes large, then funding rates start to go up. And so then funding rates become an indicator of like the demand pressure for leverage trading in Bitcoin. And then the options market tell you what people are projecting forward in terms of volatility. And so as I just mentioned, like the vols, given that you're an all-time high, given that you had such a rally, vols less than 60 are like surprisingly low. It's surprisingly under control. And actually, the same pattern is true with funding rates. So funding rates all year have been relatively moderate in Bitcoin. It's only now that they're sort of starting to pick up towards annualized rate, maybe 50 to 70%. But if you look at 2021 on Binance, for instance, like funding was at that level consistently for 3 4 months as we went up from 40 to 60. And so now it's this very interesting question to sort of ask yourself, why are funding rates in Bitcoin so under control, right? So moderate. And there's sort of three theories you could have, all of which could be true, or like, true in parts. So the first could be that it's simply early, right? That the funding rates that we're currently seeing in Bitcoin are they mimic sort of 40K in back in 2021. And so on that basis, you basically say it's just early, and we have at least like 50% more room to go, and so that puts you at 120 BTC temporary peak. Okay, sounds good. Um, Another theory, though, could be that the that Bitcoin dominance and the altcoin cycle um, is different this time, and that there's sort of a displacement of the demand for leverage away from Bitcoin into alts, memes, and also maybe to some extent the displacement from centralized to decentralized venues. And so indeed, if you look at decentralized platforms, the funding rates tend to be a lot more volatile and elevated there than when you look at Deribit or Binance, for instance. Um, and to some extent as well, it is not unlogical to assume that this classical pattern of Bitcoin dominance first, right, goes up, Bitcoin stabilizes, and then alt start to rally. It is not unlogical that the market starts to increasingly front run that pattern, and that the memes are now more and more correlated with the Bitcoin cycle, uh, and that people basically see Bitcoin go up and they buy alts. So that's sort of the displacement theory. And then the third element could be also that with the growth of institutions coming into this space, with also projects like Athena, that there's a structural difference in the market. That there's a new set of actors, and they love the basis trade. They love, let's say, long spot Bitcoin, sell perps, and collect funding. and that those yield traders are also more structurally keeping funding rates down. Um, and it's interesting to actually take a view on that, right? Because in function of these theories, or which of the three elements you give weight, it's sort of like an indication of where you are in the cycle. So I do think it's interesting for people to form their own views. I personally, honestly, haven't made up my mind yet. I think all three are sort of probably partially true. But it's yeah, to summarize, it's the interesting feedback from the derivatives market is sort of the lack of feedback, is sort of how interestingly uninteresting a lot of these metrics are still looking, despite the crazy rally we've seen in the last month.
I think that these are all possibilities. I'm definitely going to lean towards the latter being institutions, I think, having a large role in this cycle at least. And maybe that changes again at some point because this industry seems to be very fluid. But that seems to be the biggest difference between now, assuming we're in a solid directional bull cycle, compared to 2021, where there really wasn't institutional involvement. And I think that does lend a lot of stability and lower volatility across certain assets, especially Bitcoin, especially Ethereum. You can really kind of see that even just looking at the market from an eyes glance. But I do think that that's a big part of it. I think yields, I think there's a lot of TVL, a lot more locked up on chain for a lot of projects rather than being actively circulated. And I think that's also good because I think it also lends a bit of stability there, and people are finding a lot of value in earning a yield, participating in ecosystems, actually using the applications and playing games, and restaking being popular now. So it's like you can still be active, but you can still leave your money. So it's a different market, and I obviously will probably have a different analysis and perspective after we get past 2025 and 2026, and we see how it shakes out. But that's kind of what I'm seeing.
That's actually something that one of the perspectives that TradFi people are the most excited about in crypto is that you can have these delta neutral trades, right? Like, um, yeah, let's take ETH for an example, right? You can long ETH, stake ETH, like earn staking yield, and then you can sell derivatives against it. And basically, what happened is you de-risk the trade, but you get double the yield. And also the two sources of yield are not necessarily correlated, and that creates for like very interesting return streams. And I think that's where a lot of the excitement will be, also around like the offerings with IBIT, and where I think the crypto space will sort of create its own crypto native alternatives, is just structured products. It's just like simple ways in which people can have a lower risk exposure to crypto, but convert it into a relatively high yield exposure. And there's so many ways in crypto to sort of almost use it as Lego blocks to create yield solutions, and it's completely untapped. I mean, I think like there was Ribbon Finance a few years back that had those like call selling vaults, for instance, now rolled up into Avo, and that's like a very powerful primitive idea. And you could slice and dice it in so many ways, and so that I think that's very interesting, and that's where hopefully DeFi also takes the lead, right? Because there it's just it's there's a little bit less like friction and compliance and regulatory concerns to sort of block the innovation. But that's, I think, truly something you'll see in the coming years, is just is the crypto yield use cases.
I love there's so many options out there now for people too. It's definitely exciting times to live in if you like Web3. Hendrik, where can people go to learn more about Thalex? Where would you send them? Website, resource materials, where they can learn more, dive a bit deeper, and then also, what is your guys' plans for 2025? I know we talked about a few things in terms of maybe bringing on some other assets other than just Bitcoin and Ethereum, and some other smaller things you want to do, but anything you want users to pay attention to that maybe you're excited for them to see going into the new year.
Yeah, sure. First, to answer where you can find us, so it's just thalex.com, thalex.com, or at Thalex Global on Twitter. If you're a Bitfinex customer, you can find us at yeah, bitfinex.com/slash Thalex, and you'll find the integration there. Um, yeah, I would say come visit the options markets if you want to trade options, but also if you want to have a better dashboard to look at where you think Bitcoin might be headed. Look at, like, for instance, the implied probabilities of Bitcoin hitting 100K. You'll find also on our website educational materials on how to sort of process that options data and what it implies, and how you can also use it for just a spot or perpetual trading. But really the idea there is that you can start using options analytics, get familiar with options, and then ultimately you can start structuring your trade with options. As for the roadmap, yeah, so the focus now is really until the end of the year, early next year, is in scaling our distribution model, onboarding many customers, and we have incentive programs as well to basically lower the cost of executing a trade on Thalex right now compared to our biggest competitors. That's of course a way we try to get people into the door. And then as soon as we have traction there on the way, we will look at the altcoin markets. And then yeah, and the longer term roadmap really is I think in the first place then beyond just altcoins is more exchanges, is integrating with different exchanges and really expanding distribution of Thalex. I think if you look at the early days of IBIT trading at the 10 vol points above where Deribit and Thalex markets were priced, and they still did I think close to 2 billion volume. It shows that distribution is king. And so really, I think for us, it's about like scaling not just the platform, but really scaling the distribution model. And then from there, we can take the lead on innovation as well.
Excellent. We'll put all the links as well in the description for the episode below so people can find everything very easily and quickly. But Hendrik, thank you again for taking the time. It has been a pleasure to have you on, and let's do it again soon. Let's do it again in the near future too.
Thank you so much.